Dinar shift. The moment so many in our community have waited for has finally arrived, representing a true breaking point in the history of the Iraqi dinar. For years, the conversation has been dominated by conjecture and whispers, but now, a decisive, formal structure has emerged. This is not another fleeting rumor or unsubstantiated leak. It is the official operational framework for the exchange of dinar holdings in 2025, fully unveiled by the highest governmental and central banking authorities. This development shifts the entire landscape from one of hopeful anticipation to one of immediate, practical preparation. For anyone holding this currency, understanding these new rules is absolutely paramount, as they define the pathway forward and establish the definitive protocol for what happens next. The time for passive observation is over. The time for informed action has begun. This unprecedented clarity comes directly from an authoritative government publication, released earlier this week, which outlines the final decree to be implemented by the central banking system. This decree details the mechanics by which existing Iraqi dinar holdings can be formally processed and exchanged. Its mere existence marks a monumental step, as the currency's revaluation process is no longer an abstract, future possibility but a concrete, defined program with a set of procedural steps. The publication effectively silences the rampant speculation that has long plagued the community by providing a formal, verifiable document that institutions will be mandated to follow. The pathway to conversion is now tangible, moving the entire process from an emotional waiting game to a structured, financial operation with established ground rules. Contained within this critical document are the core elements of the entire exchange system. Specifically, the decree details the precise methodology for the exchange rate application, clearly identifies the financial institutions that will be officially authorized to handle the transactions, and meticulously specifies the full range of required documentation from all dinar holders. This level of detail is a major departure from the vague, partial statements and unofficial leaks of the past. What we now possess is a formal, firm, and most importantly, actionable protocol. These rules are the playbook that banks and holders alike will adhere to, ensuring a structured and regulated process. The era of guesswork has formally concluded, replaced by a system designed for accountability and order. Breaking down the mechanism of the exchange rate is essential for every holder. While the official communication, by its nature, stops short of publishing the final, definitive numerical rate, the regulations specify that the rate will be applied uniformly across all approved banking channels. Crucially, this official rate will be contingent upon the verified status of the dinar holder. This means that if an individual's holdings are properly documented, legally acquired, and recognized by the system, their conversion will be processed at the official, verified rate. This is designed to counteract the confusion and price disparity created by the various speculative figures that have circulated in unofficial markets, establishing a single, regulated valuation for compliant exchanges. The second critical component of the newly unveiled system relates to the authorized exchange locations. The decree unequivocally states that only banks and financial institutions granted explicit approval by the central authority will be permitted to conduct the conversion process. This provision is absolutely vital for safeguarding the integrity of the currency and the security of legitimate holders. By restricting access to a regulated network, the central banking system is taking decisive action to shut down unauthorized dealers, unverified internet brokers, and predatory schemes that have operated in the gray market. Holders must understand that engaging with any unapproved entity carries a substantial and explicit risk of exclusion from the formal exchange process. Furthermore, the new framework introduces clear transaction limits and thresholds. These restrictions will dictate how much dinar a holder is permitted exchange within a specific, predetermined period. The decree specifies that these limits are not universal but will vary significantly based on the type of holder involved, distinguishing clearly between individual citizens and large institutional or corporate entities. This tiered structure, based on verified status and account type, is designed to manage liquidity, prevent market shocks, and ensure an orderly roll out of the conversion process without overwhelming the national financial system. Holders are advised to familiarize themselves with the limits corresponding to their category. The final pillar of the new structure involves the documentation requirement, which is non-negotiable for all participants. Every holder must be prepared to submit a comprehensive set of official records to clear their exchange. This includes a valid government-issued ID, robust proof of ownership, original purchase receipts, or recent, authenticated bank statements that trace the chain of custody. The system is intentionally stringent. Documentation must be submitted and fully validated before any exchange is cleared. This requirement emphasizes accountability and ensures that only legally acquired and verifiable holdings enter the conversion system. Serving as a powerful anti-fraud measure, the immense significance of this announcement cannot be overstated. For years, the global community of dinar holders has existed in a perpetual state of waiting, subjected to a relentless cycle of rumors, unfulfilled promises, and contradictory statements. The publication of these formal, structured rules represents the end of this period of crippling uncertainty. It signals, with the highest level of formality, that the government is fully committed to the process and that the necessary preparatory work at the institutional level is well underway. The ambiguity that has long clouded the dinar's future is finally receding, replaced by a clear, known, and defined protocol. The establishment of this known protocol has immediate consequences for the financial environment surrounding the dinar. When banks and institutions are given a clear, codified game plan, confidence in the process begins to build naturally. The transition from limbo to known protocol is a game changer. This newfound structure means that the dinar's potential economic value moves from mere abstract speculation to a more concrete, tangible reality anchored in government decree. While this is not a guarantee of instant financial gain, it provides verified holders with a definitive roadmap, allowing for proactive, deliberate preparation. Turning to the critical subject of the exchange rate, the official decree is deliberately calibrated, withholding the final numerical rate for formal release. However, information from multiple vetted insider sources strongly suggests that the rate set for properly verified and documented holders will be markedly superior to the figures currently observed on the open, speculative market. The official rate is reportedly being discussed in a range aligning with 370 to 410 dinar per US dollar. It is crucial to note that this exact figure remains subject to internal refinement, potential constraints on national liquidity, and the specific institutional mechanisms involved. But the reported range is a powerful signal. If these reported figures hold true, the magnitude of the official rate is extremely meaningful for the holder community. Many individuals have been accustomed to tracking and referencing market numbers that sit substantially below this anticipated official tier. This formal alignment would mean that eligible holdings could be processed at a valuation far superior to what they might have conservatively expected from the gray market. It is a clear indication that the official valuation conversation has decisively shifted. Nevertheless, all holders must maintain vigilance and patience, as final details may still be subject to refinement until the very first batch of exchanges is executed under the new system. The eligibility criteria for exchange are now strictly categorized under three primary groups, as defined in the rules. These are individual verified holders, institutional or corporate holders, and banks authorized dealers. The requirements are explicit. For individual holders, the crucial element is provable legality. The dinar must have been purchased through authorized channels, and verifiable documentation of that transaction is a strict prerequisite. Corporate and institutional entities face a separate, more rigorous mechanism involving official business documentation, audited corporate accounts, and full regulatory trails. The distinction between these holder categories is essential for understanding the entire exchange ecosystem. Banks and the authorized dealers are the tightly regulated entities given the sole permission to process bulk exchanges and handle the official conversion mechanics. For the individual holder, the message is unambiguous. The security and eligibility of your holdings depend entirely on placing them within the correct, approved channels. Holding dinar in an unverified account or dealing with an unapproved private broker introduces a genuine and significant risk of being excluded from the legitimate, formal conversion process. We can now define the transaction sequence as outlined in the decree, providing a clear step-by-step walkthrough of the conversion. Step 1 is verification, requiring the holder to present their government ID and documented proof of ownership receipt statements, or a custody chain. Step 2 is submission, carried out at an approved bank branch or a secure digital portal designated by the central banking system. Step 3 involves rate application, where the institution applies the official rate based on the holder's fully verified status. Finally, Step 4 is the fund transfer, with the converted currency being securely deposited into the holder's designated bank account or an officially sanctioned digital wallet. This defined four-step sequence emphasizes that the process is far from a chaotic event. It is a tightly structured and regulated system. It is specifically designed to enforce verification, documentation, and accountability at every single stage. This formal design is intended to serve a dual purpose: to protect the legitimate interests of verified holders and to safeguard the stability and integrity of the broader national currency system. The establishment of this rigid protocol stands in sharp contrast to the previous, less defined environment, ensuring order and security for the conversion event. The specified timing for this rollout is a critical element for every holder's preparation strategy. According to the decree, the approved institutions are under mandate to become fully operational by mid-November 2025. This date marks the official starting point for verified exchanges to begin rolling out in initial batches. Following this pilot phase, a wider, more comprehensive rollout is slated for December 2025, once the systems have been thoroughly stress-tested and the initial conversions successfully executed. This timeline provides a concrete window for necessary preparation. What this timeline means for every holder is clear: the immediate focus must be on proactive readiness. Now is the essential window to compile and organize all required paperwork, ensure all holdings are correctly accounted for, double-check the validity of purchase documentation, and accurately identify the list of banks officially approved to handle the process. While waiting until the system is fully live might still allow for conversion, being completely prepared before the launch window opens confers a distinct, valuable advantage in terms of swift, complication-free passage through the system. One of the most profound benefits of this announcement is the reduction of uncertainty, which has historically been the greatest risk factor for dinar holders. By publishing the rules, a path is provided. By setting the timeline, a focus is established. By demanding documentation, a necessity for proactive engagement is created. With these structural elements now firmly in place, larger global forces begin to respond. International banks and investors view formal regulation as a sign of credibility, potentially shifting speculative pressure and establishing a firmer foundation for the dinar's future. However, this opportunity is accompanied by an immediate and strong need for caution. The official rules explicitly ring-fence the exchange process, confining all transactions to authorized banks and regulated institutions. Consequently, any platform, private dealer, online scheme, or purported exclusive offer that claims to process an exchange outside of this official, central bank-approved system is, almost without exception, operating as a fraud. The experience of past years rife with fake exchange centers must serve as a warning. The current message is clear and unambiguous: only use official channels listed by the central authority. Examining the broader economic implications of this structured exchange process reveals an intent for systemic stabilization. The clear rules and regulated institutional participation are designed to inject confidence and order into Iraq's currency market, curbing chaotic speculation. Increased global confidence can lead to a more serious engagement from international finance, potentially resulting in greater liquidity, wider market access, and a stronger position for the dinar in the context of global trade. The transition from a peripheral currency to a recognized, regulated financial instrument represents a significant structural leap for the nation. The announcement also serves a vital function of investor preparedness. By revealing the full rules and timeline well in advance of the full rollout, the governing bodies are intentionally affording holders the necessary time to ready themselves. This is not a sudden, jarring event. Holders have a defined window, weeks, to compile their evidence of holdings, verify their documentation, ensure their banking relationships are correct, and fully internalize the step-by-step procedures. This kind of lead time is exceptionally rare in major currency events, transforming the dynamic from a reactive rush into an intentional, strategic maneuver. Therefore, the practical steps for any dinar holder are straightforward and require immediate attention. First, meticulously compile your full suite of documentation, including receipts and custody trails proving legal acquisition. Second, actively identify the banks in your geographical region that are on the central authority's approved list. Contact them to verify their status and understand their local procedures. Third, ensure all personal identification is valid, bank accounts are active for fund deposit, and all local regulations regarding foreign currency exchange are satisfied. Finally, stay vigilant, relying solely on official bulletins from the central bank and verified financial media. Looking at the milestones for the community, the situation has fundamentally shifted from a period of waiting for an event to a period of preparing for execution. The system has moved irrevocably from a conceptual plan to an imminent, structured rollout. The date of mid-November is the expected commencement for verified exchanges, mere weeks away, with December marking the transition to the broader access window. Keeping this timeline at the forefront of one's mind is crucial, as preparation now is the only way to ensure swift passage once the gates of the official exchange system open. Reflecting on the historical context underscores the magnitude of this change. For a community long dominated by the ambiguity of rumors and unofficial leaks, the publication of the central bank's decree marks a genuine historical watershed. The discussion is no longer centered on if a revaluation process will occur, but on the precise when and the mandatory how. Dinar holders are no longer merely hoping for an event. They are now equipped with a formal, defined process to follow, which fundamentally changes the psychological and structural relationship one has with their holdings. Furthermore, this announcement significantly increases transparency within the system, and transparency is the bedrock upon which genuine financial trust is built. When the rules are universally known, by the government, by the financial institutions, and by the holders, the entire ecosystem becomes far less susceptible to the dangers of fraud, manipulation, and costly misdirection. For the dinar community, this movement toward a legitimate, codified ecosystem strengthens their collective position and, critically, improves the dinar's overall standing and credibility within the global financial world. However, a necessary dose of realism must temper the positive news. While the framework is established, this does not translate into an instant, guaranteed payday. Variables still exist, the final exact exchange rate remains pending, and the operational reality of individual banks may involve logistical or regulatory hurdles. There may be minor delays or adjustments in the initial stages. Holders who have not completed their full verification may still need to wait for the broader December rollout. Therefore, while urgency in preparation is key, it must be matched by diligence and an understanding of the unfolding process. To illustrate the critical nature of preparation, consider a scenario projection. A fully verified holder who has proactively prepared their documentation and identified their approved bank stands ready. In mid-November, they submit their holdings to a live, regulated system, the official rate is applied, and the converted funds are deposited. This holder bypasses speculation, fraud risk, and procedural ambiguity. In sharp contrast, an unverified holder, or one dealing with an unapproved broker, face the prospect of substantial delays, potential exclusion, or being forced to wait for a broader, potentially more cumbersome rollout. The difference in outcome emphasizes the value of early preparation.